Welcome back to Investing Talk Podcast. Today, we're going to look at the story of ScanTech AI Systems. They trade under the ticker symbol STAI.
Yeah, it's been a wild ride for that stock.
Tell me about it. I
Yeah.
mean, look at these numbers. A 52-week high of $12.19 on December 30th, 2024.
Yeah.
And just a few days later, on January 3rd, 2025, it plummets to a 52-week low of $1.82.
You're not kidding. I mean, what happened?
What happened indeed? What took it so high and then brought it crashing down so fast?
Well, the story starts with Mars Acquisition Corp., a SPAC. They merged with ScanTech Identification Beam Systems. And I think that merger is really the key to understanding what happened here.
Okay, so for our listeners who might not be familiar with SPACs, what is a SPAC?
Mm-hmm.
And how did this SPAC create ScanTech AI Systems?
Well, think of a SPAC as like a shell company, a special purpose acquisition company. The purpose is to take a private company public. It's kind of like a shortcut. Instead of doing a traditional IPO. Yeah. In this case, Mars Acquisition Corp. raised a bunch of money through an IPO, but the only reason they did that was to acquire ScanTech.
Makes sense.
So once the merger was done, Mars Acquisition Corp. was basically gone, and then ScanTech AI Systems was born.
So that's where the name change came from, and the new ticker symbol. But that still doesn't explain the crazy price action we saw. Did something go wrong with the merger?
No, not necessarily. Sometimes you see this thing with SMACs. It's like buy the rumor, sell the news. Investors get all excited about the deal before the merger. They drive the price up because they think the company has huge potential.
Right.
But then, once the merger happens and the excitement wears off, a bunch of investors sell their shares. And then the price drops.
I see. So like inflated expectations,
Yeah.
meeting the reality of the newly merged company. That could definitely contribute to the price going down. But was that the only reason for the drop?
Not really. We also have to think about what was happening in the market at the time. Remember, early January 2025 was rough for the market.
Yeah.
I mean, the S&P 500, which is a big indicator of how the market's doing, it had 5 straight days of losses.
Oh, yeah, I remember.
So when the whole market is going down like that, it adds more pressure to sell stocks like STAI. And that pushes the price down even more.
Okay, so we have post-merger jitters and a bad market. That helps explain what happened with the stock. But we still don't know much about ScanTech AI Systems itself. What does this company actually do? Are they going to be around for a while, or are they just a fad?
Well, this is where things get interesting. ScanTech specializes in something they call advanced non-intrusive security technologies. Yeah, I know, it's a bit vague.
It is.
This whole area of security technology is getting a lot of attention and a lot of investment.
Yeah, it makes sense. AI and security are two of the hottest areas right now. Everybody wants to be safe, and AI seems to be the answer to everything these days.
Exactly. And that's where ScanTech comes in. As the name suggests, their technology uses something called beam systems to identify people.
Beam system.
Yeah, so imagine a security system that can identify you without having to pat you down or use facial recognition software.
Oh, wow.
They're thinking about using it in airports, stadiums, even stores.
Now, that's interesting. So we have a company in a hot sector with some potentially revolutionary technology. But how are they actually doing as a business? Let's look at their numbers.
All right, well, as of today, January 12th, 2025,
Yeah.
STAI is trading at $2.20.
Oof.
Yeah, not great. It's way below its 50-day moving average of $9.89 and its 200-day moving average of $10.61.
Not exactly a sign of a healthy stock.
Nope.
But are there any good signs in the numbers? Anything that suggests they could turn things around?
Let's take a look at their relative strength index, or RSI.
Yeah.
It's at 43.73 right now.
Okay.
Think of the RSI like a thermometer for a stock. If it's over 70, the stock's too hot. And if it's below 30, it's ice cold, which could mean it's oversold.
So at 43.73, STAI is getting chilly. But it's not frozen solid yet.
Right.
So maybe there's hope for a comeback.
It's possible. But we have to be realistic here. STAI is a pretty risky investment right now. It's not for the risk averse. There are a lot of things that could make it go up or down.
So the big question everyone's asking, is STAI a buy, sell, or hold? What's your expert opinion?
Well, I can't give financial advice, but I can help you understand the important factors to think about so you can make your own informed decision.
Fair enough. So what are those make or break factors that investors need to be watching? What will decide if STAI ultimately succeeds or fails?
I think the first thing to look at is how well ScanTech is doing as a business. Can they actually do what they're promising? Do they have a good plan for growth? And more importantly, can they actually make that plan happen?
Right, so it's not enough to just have some cool technology. They actually have to turn that technology into a successful business.
Exactly. And that means we got to look closely at their financials. How fast is their revenue growing? Are they making a profit? And maybe most important, how fast are they burning through their cash?
Cash burn rate.
Yeah, that's a super important number for any new company, especially one in a field like AI that needs a lot of money to grow.
Right, if they spend all their cash too fast, they might not have enough left to become profitable.
Exactly.
But it's not just about how ScanTech is doing internally, right?
hmm
The market as a whole also has an impact.
Oh, absolutely. Even the best company can get hurt if the whole market is going down. Things like interest rates, inflation, and fears of a recession, all that stuff can create problems that no company can really control.
So ScanTech could be doing everything right, but a bad economy could still drag them down.
Sadly, yeah. And right now, like we were saying, the market is sending mixed signals. Investors are trying to figure out what the Fed's going to do with interest rates and what the latest economic forecasts mean, but it's still kind of unclear.
Okay, so lots of external factors that could affect ScanTech's success. But let's just say for a minute that they managed to overcome all those challenges. Is there reason to be optimistic about them in the long term? Could STAI be a hidden gem that's just waiting for patient investors to discover it?
I think there's definitely potential there. The demand for AI-powered security is only going to go up. If ScanTech can get a big piece of that market and show that their technology really is a game changer, then there could be a huge payoff.
So a lot depends on whether they can execute their plan and gain traction in the market. What about the competition? Who are ScanTech's main rivals, and how do they compare?
That's a great question. The security technology sector is full of established players and new startups. There are companies like Liberty Defense Holdings. They trade under the ticker symbol LDEF. They're developing AI systems that can detect weapons. And then you have Patriot One Technologies. Their ticker symbol is PAT. They're focused on using AI and sensors to detect threats.
So ScanTech isn't exactly alone in this space. What makes them stand out from the competition? What's so special about their technology?
I think their focus on what they call non-intrusive identification is a key difference. A lot of the current security systems out there rely on methods that can feel really invasive or annoying, like pat-downs, metal detectors, or facial recognition. ScanTech is trying to create a security experience that's smoother and less intrusive.
I see. That sounds appealing, especially with everyone being so concerned about privacy these days. But again, it all comes down to execution. They need to prove that their technology actually works the way they say it does, and that they can scale it up to handle the demands of different security environments.
Absolutely. Investors will be looking for proof that they've had success with pilot programs, partnerships with big companies in the security industry, and of course, a growing number of paying customers. Those are the things that will show that ScanTech is turning their vision into real results.
So to sum it up, we have a company with some potentially revolutionary technology in a sector that's growing quickly. But they're facing some big challenges: a volatile market, tough competition, and the need to show that they can make their ambitious plans a reality. What would you say is the biggest risk for ScanTech right now?
I'd say the biggest risk is execution risk. They have a good vision, but can they actually turn that vision into a profitable, sustainable business?
That's the million-dollar question. For investors who are thinking about taking a chance on STAI, what's the one key metric they should be watching most closely?
I think it all comes down to revenue growth. Are they getting new customers? Are they expanding into new markets? Are they turning their innovative technology into actual money? That's the ultimate sign of success.
Revenue, the lifeblood of any business. Makes sense. So for our listeners who are intrigued by ScanTech's story and are thinking about adding STAI to their portfolios, what's your final takeaway?
I'd say this STAI is a high-risk, high-reward investment. It definitely has potential. But it's really important to go into it with your eyes wide open, do your own research, think about how much risk you're comfortable with, and be prepared for a potentially wild ride.
Solid advice. Always remember investing is a marathon, not a sprint.
Yeah.
Okay, so we've covered a lot today. We've talked about the SAF merger that created ScanTech AI systems. We've looked at their technology and who they're competing against, and we've analyzed the key factors that will decide if they succeed. But before we wrap up, I want to turn the tables and ask you, the listener, a question. If you were thinking about investing in STAI, What's the one thing you'd be watching to see if ScanTech AI is going to make it? Just something to think about, see if we're on the same page.
That's a good question, and one that anyone thinking about investing in this company should ask themselves. There are a lot of things to think about, but I think for me it comes down to partnerships. ScanTech's technology sounds great, but to really be successful, they need to get it working in the real world.
So you're saying it's not enough to just have a cool product. They need to show that it actually works and that the big players in the security industry are willing to use it.
Yeah, exactly. Look for announcements about them working with airports or government agencies or big companies. Those kinds of partnerships would be a good sign that ScanTech is getting some real traction and that people are starting to trust them.
Partnerships, revenue growth execution. It seems like there's a lot going on with ScanTech AI systems.
Yeah.
It's a company with a fascinating story, innovative technology, and the potential to change the security industry. But it also comes with some risks and uncertainties.
Absolutely. Like with any investment, you got to do your homework. Don't just believe the hype. Look into their financials, check out their competition, and see who's running the company. Making smart investment decisions means staying informed.
Couldn't agree more. Well, there you have it, the ups and downs of STAI. A story of SPAC mergers, market volatility, and the constantly changing world of AI-powered security. We hope this episode has helped you understand ScanTech AI systems better and giving you the tools to make informed investment decisions.
Remember, investing is not about following the crowd or chasing the latest fad. It's about making thoughtful choices that fit your financial goals and how much risk you're willing to take. Be curious, stay informed, and never stop learning.
And of course, if you like this episode of Investing Talk Podcast, don't forget to subscribe, share it with your investor friends, and leave us a comment. We love hearing from you. Until next time, happy investing.